Yo, yo. Hopefully everyone's doing well. I'll get started. Let me do this. All right. So, today, obviously, lacking any high impact news driver besides the U of M consumer sentiment, whatever came out. Weekly profile is kind of this consolidation midweek decline, or if you have a retracement on Wednesday, a couple different weekly profiles that it can be, but normally you just have this kind of decline, consolidation, or retracement into Wednesday or Thursday, and then a continuation going to the rest of the week. So we're talking about weekly projections and swing points for forming the low of the week or projected low of the week. We have, so weekly opens here. You don't really have a big enough retracement leg on the high of the week here. So instead you take the retracement opportunity that's being offered from this Tuesday low to this Wednesday swing high on the 1 hour chart, right? You weekly profile that, you're left with the 1.27, 1.68 extensions and the 2 symmetrical price swing. So inside of this 1.27 and 1.68, you see a PD array on a lower time frame. This will be present on the 4 hour chart. Bam. All right. So sell side liquidity from Thursday's daily low being traded into inside the 1.27, 1.68 symmetrical price swing. And then on the 1 hour chart and sub 1 minute charts, you have order flow as well. If you look at the midnight opening price, comes up, runs out the short-term swing high here during key time, which is at 3 a.m., and then starts to displace through this open, and you have a 1 hour change in state delivery and subsequent 15-minute PD arrays being held on the way down. Right, then you have a premium PD right here, and more of a 15-minute gap. Same thing over here, 15-minute gap, all being traded into between the times of 7 to 10. And our target for the low of the day, like I said, is that sell side resting within the 1.2s and 1.68. The previous weekly low down here, which is slightly further, and then time of day, which would be the London close. So as long as it's running price and time at the same element, then that's qualifications for the low of the week. I'm hopefully looking for at least one little run lower to this 24,805 level. But if it doesn't give it right now, it's not the end of the world. But more so kind of just, I just wanted to hop on and look at the AM session PA, see if there's any silver bullet scalp or 1050 macro scalp that we can tape read right before the move is basically finished. But 9:30 drops back down after filling some inefficiencies in the 15-minute chart like we just saw, runs straight for that sell side. And then you have a retracement back into premium during the macro time from the swing high to the swing low. You have your inefficiency in premium, right? Fair value gap, first presentation fair value gap technically as well. So first presentation fair value gap inside of the new week opening gap. Who cares if it's inside there or not? But I mean, technically you should, but more so I'm drawing your attention to the first presentation fair value gap being formed inside of premium of the dealing range prior to the macro time, as well as there being a bearish order block paired with that first presentation gap. You also have the new week opening gap. That's nice, but when we're looking at just kind of the lower time frame price action, it's not required, at least in the way that I analyze PA. But you do have the new week opening gap from a couple of weeks ago also being stacked on top of there, so it makes it supercharges this PD array. Trades up into it prior to the 10 a.m. news. 9:59 shoots down. Tiny change in state delivery there, and then the 10 a.m. news driver, orange folder news driver, just opens up, creates volume imbalance, and then shoots right back down for the sell side, forming the new swing low for the day post 10 a.m. into London close, into the 1.27, 1.68 extensions for the week, and into the current daily sell side that we're just resting underneath this short-term swing low. So since you kind of have the day, the week, and the session lining up with this specific scenario, silver bullet a lot of times can create an entry opportunity, even though we ran down below the swing low. So like I said, if it wants to give a run down to 24,804, we'll see if there's any tape reading or scalping opportunities that are within this range. Otherwise, I'll hop off and basically be done for the day and for the week. But you can see it's holding this FPFEG, right, as well as the volume imbalance that's formed in premium of that dealing range, right between 9:59 and 10 a.m. So closing price and opening price there. And the fact that obviously you have the new week opening gap being printed on top of it. So inside of here, once it forms this swing low inside of that range, this deeper retracement isn't as expected as, coming back up into maybe this gap or this gap, but it's returning back to a higher time frame dealing range premium. So we look back at the 5-minute chart. It's running the sell side. You have this inefficiency here, but you also have the VI. So all of this dealing range then from this swing low back up to this short-term swing high is the parent dealing range, and it's running a higher time frame pool of sell side. So it's a lot of comeback at a premium. I know it looks choppy as a result, but it's going to come back in a premium to a higher time frame array, either into a 15-minute gap or a 5-minute gap, and then be able to expand lower. So notice on the 15-minute chart inside of here, candle bodies regardless, this one at 10:15 stayed within this up closing candle. It was validated as soon as it took out this short-term swing low as a bearish order block, although it's low probability. You still want to see, does price want to hold within this up closing candle range, right? And if it does, on lower time frames, you have this continuum of PD rays, in this case, the 5-minute order block here, and obviously 1-minute VIs and 5-minute PD rays and such, to create opportunities on the lower time frame that we can take. So 15-minute order block for the most part being held. 5-minute as well. Order flow is a little bit more high resistance as you see it coming all the way past mean threshold and wicking above the order blocks, which is expected because of the fact that we're in deep discount. We've already reached 90% of our weekly profit, our weekly goal, weekly target, and you're not going to see order blocks in a downtrend when it's already 75% of the way to the terminus hold order blocks perfectly like you see it at the top of the MMXM. So we allow for this kind of price action where it's up and down. In this case, it's still holding the OBs, but weirdly, and they're not super high quality OBs as a result. So you have to find kind of entry models that are going to support proper stop loss placement, but then also still a good entry to give you a run. So I'm looking at how the fact that if this is supposed to be the daily low, we do have a BPR down here and then a breakaway gap being formed in here, as well as an inefficiency on top of this would be a breaker on a lower time frame. So if you extend that out, wicks into it, that's nice, runs above, fails to run above the short-term swing high. Then it comes back down, sweeps that swing low, fails to give another SysD or market structure shift. Then it energetically drops here. We have an inefficiency with the bearish order block, holds this, right? Whilst it's dropping into the breakaway gap, and also disrespecting the fair value gap up here that we had spoke about. So the short-term draw on liquidity, or even the silver bullet, is still lower, is the way that I read it, and preferably down to the 24,805.25 level. So this, well, short to the draw, but this right here would have been a nice entry if it's using this as a OB minus. This and this, right? This becomes a propulsion block. So if we can get an immediate rebalance back up to this swing high, which we may not get, this may be left open as like a breakaway gap. Potentially use this as an entry, but let's wait and see. Let me pull up my, there we go. So let me screenshot this really quickly. I'll put it in predictions chat. So looking for another run lower, preferably down towards the 24,805 level. Bam. So it came up, doesn't get the full IR all the way up to the open of that candle body, like I said. So you want to see, is this gap being left open as a breakaway? And if it is, it's not a big deal, but it just shows you the weakness in price action and what you're expecting as a result of the PD raise on the bullish end failing and the bearish end starting to hold. That's perfectly fine if it leaves us as a breakaway gap, but Notice how as well, down, up, down, and it's leaving all this as a balanced price range. And then it gaps away from the balanced price range. So this is a true inefficiency, right? It's not a breakaway gap in the sense of it's balanced, but just more so the speed. And it's being placed on top of something like this. And if it's leading into a BPR or a wick, this could have the tendency of forming as a breakaway gap. So technically right now we're looking at as a sibi, sell side balance, buy side inefficiency, a true gap. So if it wants to come up and fill, it can. And we can even watch a lower time frame to see if there's like other PD rays below that they may substitute. We can use like this up closing candle here. We want to see does price want to close like it's been doing for here, 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 here. Below that, it does not. So we're more likely to see this fair value gap fill up to consequent encroachment, or even just stay within here. But it just so immediately responds back down. So like even in here, this could be a short-term scalping opportunity from this change in state delivery down to the short-term swing low. And obviously it's post 1030. So you have time dynamics starting to work in alignment as well. Let's watch on the 15-second. Now you don't have displacement through this open. So you don't have, as a result, a high quality order block that you can refer back to. So, and also there's no key time. You know, we're using silver bullet here instead of the macro. So you want to be watching how this up closing candle and like I said, the gap is going to hold. It fills past consequent encroachment back up to the OB. And now you have the immediate rebalance back up from all the inefficiencies that were formed within this range. So how this candle prints and the next couple of candles print regarding this gap and the order block is going to be important to see if we can actually get a run below the swing low or if it wants to stay within this consolidation and go back up to here. All right, this should be left clearly as a breakaway gap. You should just see price really just hold within this entire range. And if it doesn't, more likely to enter consolidation or it's going to have that run during the 1050 macro. So this is our areas of interest. You can see the nice reaction you get off of the order block here with a gap. Now you have change in state delivery. And then targets would be obviously short-term swing low down here at 24,881. And then 24,805. 24,805. Now you can see it does the change in state delivery want to be used as a bearish order block. So you want to see it expand and start to form a gap now. All right, you look at this left side of the chart. Are there PD rays that are going to support us or discount PD rays that can form short-term retracements into premium basically? And all these in here is part of this balanced price range, BPR. So you'd like to see it just quickly, energetically run down for the swing low and preferably close below the swing low and start to gap through it. And then kind of lead us into more likely that 24,805 is a likely draw on liquidity for the rest of the session. So notice how your gaps forming here, gaps forming here. You want to see its speed now. So it's running out. There's no really short-term swing low. So, I mean, you got this one, but this is really relative equal lows. So you're not going to see it bounce off this one. It's very unlikely it's going to bounce off this one. You're likely to just see it gap through. So PD rays in here. There's a fair value gap there with a volume bounce. Not a lot of bearish order blocks, so you refer back to this SysD as the current OB minus, I guess. And like I said, so the current draw on liquidity for time and for the day would be this short-term swing low. But if it gaps through, preferably on a 5-minute chart, and you have like a 5-minute sibi or a 5-minute bearish order block, then you're likely to see the 805 level hit. Still, I mean, it's still a good, 80 points down, which is low-key crazy. You're looking at the ranges here, like this is 80 points, right? So don't forget with the volatility, this is an entire weekly goal, even points technically. So I want to see how the candle bodies now are using this. Like I said, you start to see it drop. I want to see a gap form, preferably on top of this swing low here. So worked up through the gap, closed back through it. It's allowed to use the lower portion of it, and really that's the most you'd want to see, assuming that it's still weak. There's the swing low being tagged. And now you want to see, does price want to spool below it? Because think about this, right? If you have relative equal lows, or if you have sell side pools that you want to see price respect, I do not want to see it run a swing low and then dilly-dally around and just give opportunities for the sellers who are below this, the sell side liquidity, to pull their orders. Right? If I'm thinking about it from a market maker paradigm or market efficiency paradigm, whatever it's called, ICT calls it, and we talk about liquidity theory and all that sort of things. If I have a pool of liquidity, from active traders, and I have a swing low, it's running out, and now they're freaking out because, oh my gosh, it's getting closer and closer to my stop loss. The longer that I let it sit there, the more likely that they're likely to pull their orders. As a result, you have less liquidity for large institutions or of banks or whatever to have exit liquidity, assuming that they're using retail. So there's obviously not controversy, but differences and stuff. But for simple purposes, that's the idea. So if it runs the short-term swing low and then starts chopping around like it is doing here, that's fine. But I don't want to see it come back and retrace deeply. I don't want to see it stay within this range and, kind of just come in here and keep doing high resistance moves and high resistance moves. I want to see it preferably spool and start to run for it. So it's a discount PD array in the form of sell side. So it's perfectly fine if it wants to come back up a little bit and retrace. Preferably just this gap and this order block range is all it needs to touch. So it just trade into the gap here, touch into the OB minus. It doesn't want to do the same thing and just rip lower. And if you see another sibi form here, you can see that on a lower time frame, it's just continuously holding. So I'm on a 15-second chart. It's obviously, like I said, not required that you do so. But even if you look at the 1-minute chart over here, how nice the order block, fair value gap, all of these PD rays are just nicely holding into a key time of day, which is 10:30. Right? So it's choppy PA, it's zigzag back and forth, I agree. But as long as you can identify the order flow on a lower time frame and have a general idea of what the draw on liquidity is for the session, there's going to be scalping opportunities in here. So notice even on a 15-second chart, fair value gap, PD rays all holding, the OB minus plus the gap. So do you want to see does it want to gap now through that swing low and start to run for the 805 level? And you want it to be quick. So let's go back to the higher time frame here. Like I said, the 1.27, the 1.68, this is the swing low that we tagged originally, which is time-based liquidity, Thursday's daily low, basically. And then you have the previous weekly low at 1345 from Wednesday. So that's that 24,805 level that we want to see. So when we talk about this being a weekly target, it's higher time frame, old sell side, previous weekly low. But if you're talking about extensions, then it may be more likely to draw back into this two symmetrical price swing maybe by the close of the day. So I'm not interested in holding it that long. So I'm more likely I'm just going to take it off at 24,805. It's Friday. on a bearish weekly profile. It's London close of the bearish weekly profile. We've seen selling opportunities being offered and hitting short-term targets. So I'm not going to demand that it just keeps going lower, all throughout this entire day. From open to close is not going to be an entire bearish day. Is not what I'm assuming. So I want to just get in, get out. So right there, those two candles you just saw, it formed a gap, came back up immediately, touched back into this box. Doesn't exist, by the way. This is just a box that I drew. Immediately comes all the way back up into the volume bounce and into the OB. Now you want to see it start to come immediately back down. If it starts to see, you see this candle starts to see gaps up, and it takes it out this short-term swing high, that'd be something of interest to trail the stop to. But you can see it just immediately having a reaction lower. So everything in this time frame, the 15-second, and you could assume on the 1-minute chart and 5-minute chart, you can see it's just gapping down. It's getting closer and closer to that sell side and freaking those people out. And it wants to get there quickly, so those orders are going to all be left open. Right? At least that's the way that I look at it. It's got a target in mind and wants to get there, especially on time. So same thing in here. Immediately wick in the discount end. Comes back up into here, which really should be a balanced price range. You have this down, up, down, with this gap being formed inside of the balanced price range to the left. Right? So even it coming back all the way up into here, this is already its number one indication that order flow is flipping. And you could be like, what the heck? How do you already know that on the 15-second chart? It's just the fact that every other PDR was holding up to this point. This is your number for your first indication of a buy program. So now you have to be careful. I'm not saying, immediately close the position or look for longs or whatever. But when I'm doing these tape reading streams, these are the things that are showing up to me. So like I said, this candle being printed up and closing past the balanced price range. Look how all these green candles are starting to show up now. And now you have, this is the second indication. It's holding a bullish PD ray. It's not the end of the world, but second indication. Right? It's coming back up to the sell side that was resting here. So we want to go back. 15-second chart looks scary because it's just, oh my gosh, it's pumping back up. But let's go back to the 5-minute and the 1-minute and see if there's PD rays here that could support us. So you have 5-minute chart. You have a gap here. I don't really want to come up to this gap, so we're looking at this wick instead. I don't really use wicks like that, so we're not going to talk about it. Instead, you have this fair value gap here that should be holding price down. So this is what you want to be seeing used, and this OB minus as kind of the line in the sand. Okay, because technically speaking, this entire thing in here, this high, low, failed high or high, this entire thing is an OB in the form of a mitigation block. So, technically speaking, you could use that. You have your -1, -1.5, OB minus plus fair value gap being used there. So going back to what I was saying, fair value gap plus the order block is kind of your line of the sand for this 24,805 level to be tagged in the way that I want it to be tagged. We're approaching 1050 macro, so I'd like to see 1050 macro continue. That being said, it can come back and retrace. If it comes back and retraces too far and then offers a sell program back down to the sell side, that it is what it is. But at this point, if the order blocks and PDRs are holding, I don't really want to see a premium retracement. So that first indication of a buy program here, second indication of buy program here, third indication of buy program would be the market structure shift above the intermediate term swing high. But these are all on a 15-second chart, like I said. So immediately it runs back up into the 1-minute fair value gap. 1-minute gap. And then boom, what do you see? Shoots right back down, closes through this bisi, and sweeps out this short-term swing low. Then it comes back up, fills the reclaimed sibi. Then it taps it again with the OB minus. It's tapping it again now here. So these things are only useful and doable, if that's a word, when you know the bias and when you have time lining up. So you can't read every single 1-minute candle like this. I can't read every 15-second candle like this, day in and day out. It's when things are lining up, when there's a drawn liquidity that's likely to be tagged, And right here, you can see at 1050, what is it doing? Retracing back to premium and referring back to an opportunity it gave beforehand, but now during a key time. So you're seeing this same exact thing happen, just like I would retrace back up to premium. This same exact thing happens now at 1050, which is key time. So it's running back up to here, which looks like a market structure shift. But in reality, this is the key time that if it wants to offer this sibi plus the order block as a sell opportunity, it's going to do it at this key time. So now we watch to see, okay, sure, it's entering to this buy program on a 15-second chart, but it's tagging into the gap, tagging to the OB, like we talked about in the 1-minute chart. That's still within the line of the sand for what we want to see in terms of this sell side being tagged with speed. Runs up into here. If you see something like this change in state delivery, all the way down here, I'm using a very far level. We could be using this shift. We could be using this inversion fair value gap all as PD rates to tell us that, okay, it's likely to keep going now. But if we get a change in state delivery here, this is where you'll see speed. And obviously true retracement for that macro time is over. So we'll mark out this key time at 10:50, 15. And this short-term buy program is something to study as it tags into the 1-minute PD rate that it offered before the macro time. So when we talk about key time and key price, sure, this is still a sell opportunity. So is the shift, so is the SISD. But then you still have to incorporate the fact that if the macro time is approaching, it's going to do that same exact thing. And then that's the real or the true sell opportunity, or the real move. And it has to be time and price aligned. So this is why you normally will use the macros, is because sure, that's a pretty solid entry, but you can also see how many different entry points we saw after that, or before that, sorry, that are still valid as long as you understand stop placement. So when I see this change in state delivery here, I'm not going to trim my stop to right there, because the 1050 macro is going to do exactly what we just saw here, right? I said before, it's allowed to come back slightly into premium, but if it goes past the OB and the order block and the gap, then I'm probably not going to be interested anymore. So we look at this as a turtle soup, run above a short-term swing high. And now as it's giving this change in state delivery, one thing that I'm looking for is with the normal CISD is you have gaps, right, being formed through that, and you have a nice like sell opportunity on top of the gap plus the OB. But notice how from here down to here, it's high resistance. So down candle, no gap, no gap, no gap, no gap, no gap, no gap, and it's kind of just holding this little area here. So it's high resistance. And this is kind of like when we talk about indications of it not willing to move quickly, this would be a first indication to me. So the fact that it does not gap back through here. So now we're seeing the displacement nicely, and it's running through the swing low. And obviously at this point, changes state delivery. We see the speed coming in. So you can presume that this short-term swing high at 1050 now should be a protected swing high. So I want to see this. Okay, well, now we're not getting the gap and the speed that I want. So let's see. I want PD rates to start forming so we can use the 3 PD ray rule, but we'll use this into, what the heck? This intermediate term high. And I know I'm going very fast with these tape reading streams, and we're using on a 15-second chart, but to me, this is the best way I can explain with real time each individual candle. I can do it on 1-minute chart and a 5-minute chart too. But every single thing that I've said in here with how to read the candles and indications of buy programs and sell programs and all that stuff is what I'm thinking when I'm trading by myself. I'm seeing all these things. I'm just not marking them out all the time. Just more so saying in my head, okay, if it does this, then I'll respond this way. And the way that you get good at this skill of tape reading and reading individual candles and what to expect is simply experience and trying things out. So my first year of tape reading on the 1-minute chart, I would just type on the chart, I want this to happen. And if it doesn't do this, then I will respond this way. If it does do this, I'll respond this way, on the chart, and I'll record it. So then when I go back into it and I see, okay, this is what I was expecting. This is actually maybe what happened, or maybe this is what I was expecting, and this is instead what happened. I have a very specific condition and the price action that led me to that belief, and then a result. and I can constantly flood my brain with true false statements to get a good read on price. In the beginning, you're going to be wrong a bunch of times. It's not going to mean anything. Then 2 months from then, you're going to get a better understanding of what candles mean what, real time. Then you're going to have a better understanding 4 months later, et cetera, to the point where the skill of tape reading can find you a setup. So realistically, you could go to any session, preferably not Asian. It's kind of the worst one I've seen. But any session, look at the 15-minute chart, identify a short-term draw on liquidity, and then read price on the 15-second or 1-minute chart, and you will find every single setup possible. But the skill of tape reading itself, when we talk about the usefulness of it in reality of proper trading, if you have a one model you want to use, is just the ability to identify when price is wanting to move to your draw or when price is unwilling to move to your draw. So confirming that your bias and your thesis for price for that day is either correct and it's going to expand for a great deal and obviously give you entries during your preferred time, or if it wants to hang out and not respect PD arrays and start flipping bias back and forth, then knowing when to leave. So to me, that's the most important part is, when I come to a price action, I think, okay, it's going to be high probability. I want to see certain things during the opening range. I want to see certain things during the macro time. And I also want to see that the 1 minute and the 5 minute are doing those specific techniques to a time aligned with time, but also holding price levels. Like, Judah swing at 9:30 and then a 5-minute SysD. Once we see that 5-minute SysD, I expect every single 1-minute PD array, not every single one, but you get what I'm saying, to start holding towards the draw. So like in this case, if I see this change in state delivery here on a 15-second chart, I should start to see that intermediate term high up there being held, and it just wanted to speed away and gap away and preferably leave breakaway gaps and sibis that we can, or not we can, but the price will constantly reuse as entries. So even in here, right, VI, you have a VI being placed, it technically counts as a gap. This still, depending on how we react to this and respond to it, shows us the strength or weakness of price. So like I said, this first indication here is the fact that this is all high resistance. And then it comes down. Notice it's not forming any sibis, right? It's just coming back up, sweeping short-term swing highs. VI there. Still no sibi, still no sibi. VI there. Large displacement candle. And then a VI after it's leaving this entire balanced price range. So it closing through it, the VI is the most flexible PD array in the entire matrix. So it's not a big deal. But this is something that, like, okay, if it's a very weak PD array, flexible PD array, and it's holding it, especially now that we have up, down, does it want to use this now? Like, boom, if it spikes into this and drops quickly, then it's very, very likely that you're going to see the 24,805 be tagged, right? So comes up into it, tags it, doesn't want to hold this candle thickness. Immediately comes back up to rebalance. Fair value gap here, now with the volume balance. You get the idea, right? So it's holding 15-second PD rays. If it's holding 15-second PD rays, you expect the 1 minute, 5 minutes also, be doing what it needs to be doing. We have a 1 minute pulled up here. You can see basically every single one is being held properly. And here's 11 o'clock basically rolling around, and you see it's going to just start spooling. So VI there runs up, runs back down, closes below it, and then you see a wick back into the VI. It's like a reclaimed sibi, or it's a PD array that now, since it's balanced and being traded through, it needs to come back up to premium here. That's fine. But now that it's leaving it and it's balanced this area, whatever it needs to do up here, basically it's done. So now these PD arrays that are formed here, order block, etc., should be starting to hold. As you see this come up, same exact thing in this logic here. So there's no sibi. So we want to look at this wick. Does it want to hold this inside of this range? At this point, I'm not gonna keep going, but you get the idea. So we just want to see it now. It's 11 o'clock. All right, on time for the take profit hour. London close, etc. It's below the opening range low. It's new time of day. the next 1 hour PD rate is in fact that 24,805 level on the 1 hour chart. So let's go back to over here, 15-minute chart. Let's go to the 1 minute chart. So on the 1 minute chart, this swing low, no gap, no gap, no gap, this swing low. So when we talk about likely daily swing low PD arrays, this is one that has my attention. This is Wednesday's previous weekly low. Now you can go to a 4 hour and I can mark out like reclaimed bisis and stuff like that, like this gap. That's great. But do I think that a reclaimed bisi from a couple weeks ago is going to be used as the weekly swing low or as the daily swing low for Friday? It's unlikely. Be something that is a new distinction for me personally, but that's why I'm previous weekly low. It's ERL. It's time based. It's right below the swing low, though it's there. It's slightly outside of the weekly profiling range. So I think it's a likely draw, like I said. Now you have first indication here, right? So we're still looking at this intermediate term high to be holding in price. But I guess this first indication is the fact you have a gap through a intermediate term swing high. Still back up to this 1 minute PD rate. And like I said, it's a 15-second chart. So your quote unquote PD rate indications and things that, oh, this is a buy program is not going to make me instantaneously flip or be worried about price action. We have to still look at it from a higher time frame perspective, and even just zooming out to the 1 minute chart, proper chart, you see it's not really any grave danger to outright reverse or do anything crazy. So still holding exactly what it needs to be doing, right? You just have an unfortunate bisi being formed here. It's like, or fair value gap. It's like, it's not the end of the world. And then on the 5 minute chart as well, you see it's doing nothing but printing black candles. So you still obviously have to be careful. Stops should be trimmed at this point to whatever comfortable with. I'm just probably going to keep it this intermediate term swing high, or even maybe squeeze out a little bit more and put it at the low end of this gap, but I'm not too worried about it, to be honest. And as well as just learning the skill, it's useful for when you're in trade and I realize that I'm not tape reading, and not properly looking at it from both sides and validating the possibility of it retracing. I know that my vision is biased. The way that I'm reading price is I'm trying to confirm something that I want to happen. So if I notice myself just marking out the sibis, when in reality, it's showing me these indications of it not going into a sell program, or even to slight things like this, where it's high resistance. That I don't really want to see that if it's in a true sell program. Then I know that I really want it to be sells, give me an outcome. And then I know, okay, I'm trading more with emotions, or I'm trading more from an outcome perspective than a process perspective. So I get into trade, I should be constantly doing this, is if I'm tape reading after the trade is in, is PD raise, bearish PD raise in this case, holding. I allow for some flexibility in case it wants to do something like this. Also, is it forming PD raise that it should be holding, as well as disrespecting bullish PD raise if it forms them or if it's on the left side of the chart. If you only find yourself marking out PD rays that are in line with your bias and disregarding data that suggests you being stopped out or potentially going against you, you're not reading price. You're trying to create a self-fulfilling prophecy of the outcome that you want, which always in trading happens to be winning. So that skill itself and just being self-aware, and also when you tape read enough, you'll see when price is really clean and when it's not. And when you're BSing yourself about how fast it wants to move, you'll tell. You can tell. So if I was tape reading this from the start of the stream, and I'm saying, okay, this should be doing this, this should be doing this, and it's constantly breaking, it's not a big deal. But then if it starts entering into a buy program, I'm still marking out sibis and stuff, I should be aware enough to see, okay, it's not really doing what I want it to do, and instead I'm imposing my will on the marketplace. So like in here, it's consolidating around. I'm not going to mark PD raise out. We know that on a 1 minute and a 5 minute, it's still in a sell program. And we also know it's in very close proximity now to this 24,805 level. So I'm not going to mark out every PD array, like I said, in here, as we already did that for the past, 30 minutes or so. So now I'm just going to watch it. Obviously, it could be marking out arrays still, but it's in very close proximity. Stop should be trimmed to intermediate term highs and whatnot. So everything should be set in stone. And this is a point where, like, if I'm in a trade, if I have runners or something, I would close out the chart and wait for time or wait for price to be tagged. I'm not going to read every single PD rate. It's more so, once I get a partial offer, whatever, I'm moving my stop to break even and not really tape reading anymore. It's more so just in the beginning parts of it. Is the trade idea valid? Should I be trimming my stop? Should I manage the trade? Once it's managed, I'm not going to over manage it. Give it breathing room, let it do its thing, and then, come back later when you're stopped out or hit TP. Very important words. If only this was recorded. I got you. Don't worry. Someone was in a trade right now should be aware of the 11:30 internal stop run. Yeah, that's true. The lunch macro being set up. Now, normally you'll see that 11:30 internal stop run when lunch has to go somewhere. Otherwise, lunch itself will be that stop run, if that makes sense. Like 11:30 starts the lunch macro run on stops. So you're absolutely correct. Although if it runs out this sell side, it more so, you look for 11:30. If I'm bullish and at 9:30 it consolidates, and then at 10 a.m. it forms the low of the day, and then it displaces up, and the previous weekly high still hasn't been tagged, then I want to see 11:30 run internal stops, create that lunch macro run on stops, and then continue higher. So on this specific scenario, it's very late into the day. It's very late into the week. We're forming the weekly low on a key PD array. Do I want to see 11:30 run back up for those swing highs and then form another sell opportunity lower? Probably not. But the fact that the 11:30 internal stop run exists can still be used as a trade opportunity to maybe buy back up to that intermediate term swing high or towards it, right? Or whatever it's likely to do. So that's why the conditions of time and everything has to be included. But you're right. You can see these relative equal highs being placed in, even on the 15-second chart, here and here and here. So it's like generating this buy side liquidity. So yeah, that is something to be mindful of. But once it runs out this swing low, if it does, then that'll be basically it for me. Have a fair value gap here. We still have to think about TGIF. So as it gets lower and lower and lower and later and later and later into the day, I get more and more sketched out about holding longer trades. So in this week, it's a fantastic week, and the opportunities are there. I don't want to be greedy as a result and expect it to keep going down, especially like I said, like you said, with the 11:30 run on stops, and now all this high resistance bias liquidity being formed here, as well as this intermediate term high. You should see this ran out in the next 2 minutes or so. I want to get out, so fill it, leave, and that'll be it. Here you go. Maybe not. There, nope. Anyways, let's do this. Anyways, from a 15-minute perspective and 5-minute perspective, that's pretty clean for Silver Bullet. Couldn't really ask for anything more in terms of lower time frame price action and precision as well. pretty solid. So on these kind of days when it's high resistance or you see this kind of retracement over and over again, don't think it's completely over. And I'm more looking at order blocks and fair value gaps to be holding, but preferably order blocks as an entry technique. So you can obviously use like a change in state delivery entry here, but if you're doing that during the silver bullet, you have to incorporate the idea that macros, whether it's a 950 or whether it's 1050, can be used as retracements. So if you get in right before it, you're likely to be stopped out if you have a tight stop or use a SISD entry. You're using these higher ones up, especially if it's above 50% of the implied dealing range from this swing low up to this swing high, then you'll see those order blocks likely hold. If it's below that, then that's when you see more deeper retracements and things like that, and those PD rates not hold as much as it normally is. So here's your swing low being ran out. One more run. Come on now. Thank you, thank you. There's your swing low. Nicely and energetically ran through. So no slippage there. It fills out properly. So I'll share my executions up in here if you want. Should we count this as a stream trade? I guess it was on stream, right? So there's your, let's go back to the one, go back to where we were up here. Bang. Screenshot that, put into predictions, and then here's my execution for this morning. Taking partials off on the short-term swing low, like I said, and then rest of the runners down to the swing low that I had here. So this is the execution right in here. So selling off of the whatever, SISD, and then retracement, also opportunity. Selling there, buying back on the swing low, as seen from there, and then buying more back down at the end of the macro time, 11:10, right on the dot, boom, 2 minutes after rest of the runners. So since it's a higher probability trade, I'm leaving, I'm taking 20 to 50% off here, and then 50 to 80% off at the low, instead of it inverse, like on a low probability day. So I'll put this in stream trades, probably something decently to study. Short idea from stream will be in recording, execution posted into stream trades. So logic identified beforehand, set up there, nicely done with all the PD rays holding. Applause for them. Like I said, even when it's a little bit high resistance, there's still going to be opportunities in here. And this was the move that I wanted personally. So, yeah, very interesting PA. It was high resistance. Yeah, it's weird, and it's likely to do this when you see, it basically running energetically like this immediately at 9:30 for that swing low. One of two things was going to happen is what I was thinking, is either it's going to run the swing low and be a swing to Z day after it formed this. But since we never got any changes to delivery in the beginning of the stream, when I was talking about it failing to hold the bearish PD rays, failing to hold the bullish PD rays and disrespecting the bearish PD rays, it's lacked to do so. And then subsequently holding order blocks and fair value gaps and such, presented the idea that I wanted to go back lower to this and ultimately down to this swing low on a higher time frame perspective. Every retrace made me rethink of cutting the risk. Yeah, exactly, with the global PA. Right. Were you considering a New York open reversal today at all? Probably not. Just more so to do with the fact that with this given weekly profile, you want to see expansion until Friday. And I just didn't see anything in here that, to me, would indicate, at least from a PA perspective, that we'd be bullish from the New York Open. It would be more so on a hunch that it's a TGIF, right? And we have this large expansion week. That's probably the argumentation behind it, as we have this flux, we have this large expansion week. We're down in deep discount. I want Friday to retrace, and that's the building blocks that it was built on. Now, when you go back to PA on the 1 hour chart and the 15-minute chart, I don't think there's anything that supports that, unless you see opening range like this, run back down, and then you got a 5-minute SISD out of this. Sure. So I would really have to validate it with opening range and PA. that idea of the fact that it's deep in discount, whatever TGIF, it has to come back up. So to me, I consider the possibility of that. Like I said, if it maybe be swing to Z, but then when it's holding the first presentation gap, and especially when the 10 a.m. news drops back down and re-offers a sell side opportunity to post 10 a.m., now it's outside of opening range. So if it wants to be bullish for the day or even for the session, it's formed the swing low potentially outside of the opening range, right? So it no longer now for the New York session can do this in a high probability standpoint, right? Of it being opening range to 10:30 to 11. So when I hopped on the charts, I was checking it constantly on my phone. But then when I actually got on here and on the stream, it was back up to the first presentation gap and basically had done this already. So at that point, okay, we have a incorrectly time-based low. Everything basically from a bullish standpoint of it being potentially a New York Open reversal was seriously unlikely. And there was more inclination with from a higher time frame perspective down to the lower time frame that it was going to drop into this previous weekly low. So that's why I was looking for the kind of continuation during Silver Bullet. Was open to it, but switched after the FPFEG held so strongly. I was thinking of the SMT with ES at those daily lows and then TGIF. Yeah, exactly. Right. So I 100% see exactly where you're coming from, and it's a reasonable thinking. You just have to validate it with at least the 5-minute order flow, because in this case, if it's a New York Open reversal, we're dropping all the way back down, and there's not a lot of price action that supports that idea, then you have to see like a perfect opening range play out. 930 at the lows, 930 SMT at the lows, ripping on the 5-minute past some sort of, past the open, it basically barely offering any retracements up into the breaker, offers the breaker very quickly and then rips again. Then I'm like, okay, you know what? It's probably going to do what you're talking about. If I don't see that specific thing, then it's more likely to continue the weekly profile in the weekly direction. Or be a consolidation day. Basically, after it runs out this short-term swing low, it just stays in here and consolidates for the rest of the day because it already did its tasks, and now it's just gonna, frolic around. But yeah, that's that. That's the importance of tape reading. Is if you have an idea going into the open, and then the opening range can tell you basically what the bias is, right or wrong. That is the most important thing out of reading price. Was thinking TGF2 with Monday high of week, saw SMT as well. Yeah. So it's an idea, TGIF isn't always going to be there, which it's more likely to be seen on expansion weeks, which this week is, right? It's a nice expansion week. But there has to be, prerequisites to the TGIF. So if I'm going to build an idea that this day is going to do something, I have to validate that narrative, right? So the narrative normally comes from things outside of the charts, which is true of TGIF, large expansion week, things like that are not specifically in this idea. But then you have to confirm that the idea is going to be true with obviously H1 order flow, M15 order flow, opening range, and sub 1 minute PA. So although this entry here at 1012 may be enticing for some people to go long off of that idea, I don't think that there's anything, at least on the lower time frames or higher time frames, that would support. Maybe the higher time frames, but lower time frames, this is a sketchy trade to take when everything has been pointing to the downside. I was also on at 8:30 this morning. Yeah. Oh, then at 8:30, yeah, I could see exactly what you're talking about. 9:30 running these relative equal lows instantly and then shooting back up. I like all that low resistance. I see the idea, but it's good practice as usual. It's just a weird week with the news being pulled and NFP and whatnot. So I was just like, you know what? I'm just gonna let it do its thing at the news. I'm gonna show up. I was still watching it from 9:30 to here, basically on my phone, just checking every 5 minutes. I want to take a very easy, smooth trade. So if it's there, I'll take it. If it's not, then I'm sitting out. And since we didn't do a tape reading stream, that also was a little bit of a higher inclination to me finding a setup. Obviously not the only reason, but we didn't do one today or doing this week. So always good to get some live examples. Yeah, exactly. And that's the most important thing, right? Happy with my thesis and then seeing that it wasn't validated. So that's skill right there, right? Number one is just the ability to adapt and accept that you're wrong is the skill itself. But then actually learning from it, and seeing the things that even in this specific distinction as to why it's not going to do something. That's why I personally love the market, because it's like a game of chess. You every single day you're learning a different distinction about the environment of what it can do, and sometimes it references back old data that you have stored up in your brain. Other times it doesn't, and you get to learn something. It's a painful learning experience sometimes with losing, but as a result, you just become a crazy good trader. Like if I look at this tape reading session and go back 3 years of my old tape reading sessions, you know, we should watch one tomorrow or something uh, during the review and just see the difference. But it is very, very enjoyable once everything starts lining up. Anyways, so you see the idea, you see the lower time frame to higher time frame explanation. This is all recorded, so if you want to go back in, you can. I'll post this up shortly. If you got any questions, obviously you can DM me. I got to catch up on those. And then we'll probably do a market review / Q&A / psych stream sometime between now and Sunday. I'll probably have two, if I had to guess. I'll probably just do a market review of today's price action today, just because I like it, and then we'll do like a big Q&A / review stuff. Like I said, sometime between now and Sunday or Monday. All right, so be safe. Journal if you didn't already. Take care, and until I'll talk to you guys next time. Peace.